So, I mean, for somebody still in their 30s, I kind of have a little bit of a boomer take on this. I do think it's great that people are getting interested in the stock market. I just don't know that they're getting interested in the right way, and I think that's the issue. Because to Ron's point, you can't tell me that fundamentals don't matter anymore, because I think they do. The fact is they never mattered in the near term, and I think now they're just not mattering for a different reason, and that's the key. So maybe we've seen this permanent shift in what is causing this near-term volatility, especially in specific stocks. But I don't think much more has changed other than that. And the last thing I'll say, just relative to the topic more broadly, so Josh Brown, a guy I have massive respect for, published an op-ed in Fortune, and he basically said, how do you convince these newly minted investors who bought one stock and it went up 800% in a couple of weeks that diversification matters? And I think the answer is that stock goes down by 50% or more, or they get a margin call, because I don't think a lot of these people have seen the ugly side of all this. So I think when that happens, the dynamics may start to change. All right, so Jeff, where would you be putting your money to work right now? So this is going to seem very boring relative to AMC going up 100% in a day and things of that nature, but REITs have been an area of the market we've been tracking for some time now, and they're up 20% this year. You know, relatively unloved. I think maybe they're a little bit overbought in the near term, but I do think that's a near-term phenomenon. They've been expanding new high list, broad participation. I think it speaks to the durability of the trend that we're seeing. 100% of the REIT index is above the 50-day moving average, above the 200-day moving average. It just broke out to a new high, and I think this is an area that benefits from a better economy. And I do think the exposures within REITs might surprise some people. Right now, over 40% of the REIT index is actually specialty REITs. So think about communication towers and data centers and storage facilities. These aren't necessarily the kind of companies you think of when you think of REITs, but now that is the case, and I think there's value here as the economy continues to improve. Ron, I want to get your thoughts along these lines, too, especially if someone is tuning in. They are interested in investing in the market. Maybe they're new to the concept of investing in the market, and the meme mania might not be for them. When fundamentals come into focus right now, what looks attractive to you? Where would you be focusing? What kind of data points would you be pulling in terms of an assessment?
Well, you know, you're looking at the economy more going to rebound nicely. And listen, today's number, while short of expectations, is still a solid print with respect to the number of jobs created. You know, the bond market's handled it well. The Fed's probably right about a certain aspect of inflation being transitory, but we still like the recovery trade. You know, small over large, value over growth, and to a certain extent, particularly in Europe, you know, international either equal to or slightly better than domestic when it comes to opportunities and cyclicals and financials. So that stuff all works. I mean, this other stuff, which again, as was just said, you know, if something goes up 100% in a day, if you go back to late 1990s, there was a company called the Globe.com that came public and went up 600% in its first day. There are people this morning who are suggesting that we've never seen anything like this before, or that individuals didn't have access to, you know, free trading or new technologies that level the playing field. We went through this in the late 1990s, and we went through it in the 60s and other periods of time. So I would stick to my knitting and invest as if I were an investor. Day trading is hard. I've seen professionals of great skill blow up in a matter of a single session. And I'll tell you, once monetary policy changes, and something that Warren Buffett always says, you know, and you find out who's swimming naked when the tide goes out, once the Fed changes policy, the tide's going to go out.
Shepard Smith here. Thanks for watching CNBC on YouTube.